So we are going to get started. My name is Helen Weber. I am the Director of Nonprofit Services at HW&Co, and I welcome you to our virtual nonprofit guide to success. Our next session is by I call him the HW&Co resident tax exempt expert, David Reape, and he's going to share his insights on trends, giving trends, and IRS updates.
Well, welcome everybody. Hopefully everyone's had a chance to get some lunch. I know I've waited on mine, but I've got a nice bowl of homemade chicken noodle soup waiting for me once I'm done, so I'm motivated to talk fast. One of the challenges of being a little bit later in the program sometimes is that other people will take some of your topics, and so a couple of things that I want to talk about giving trends and tax updates. Pat, Tony, and Jim have kind of touched on a little bit, but we'll touch on them again, just as a reminder, and also to address anybody that may have missed the earlier sessions. Helen already covered the housekeeping items. This is a pretty quick session, so any questions you have, we can address by email later. And then a couple of what I really wanted to talk about in the few minutes we have is taking a look at charitable contributions in 2019, just trying to figure out, trends, who's giving, where's the money going, and then spend a few minutes talking about how the world we are living in with COVID could have an impact on some of those items. So where I'm pulling a lot of my information off of is from the Giving USA annual report. So every year Giving USA does a report on philanthropy for the year, looking at the most recent calendar year and then kind of looking at trends and some statistics. So the 2019 report was issued in this past June. So looking at some of the big picture trends, we can see at the top there that total contributions in 2019 was almost $450 billion. And this information is gathered from a number of sources, including information that they can get from IRS on statistical giving, looking at information from charities themselves, foundations, donor advised funds, and that type of thing. So they pull information from all these different sources to come up with this annual report. So in 2019, about 69% of total giving came from individuals, about 17% from foundations, 10% from bequests, and about 5% from corporations. One of the things to be a little bit aware of with that first item is even though giving from individuals comprises the largest part of the contributions, the pool of givers has been slowly shrinking over the years. So what's happening is some of the givers or donors are giving larger donations. In a given year, there's some significant, billion-dollar donations being made by the very wealthy in this country. But that as a base, the total number of households within the United States is shrinking slightly on a year-by-year basis. I am a CPA, so I love numbers and love statistics, so we'll go over a few of them. These, again, are from the Giving USA report, and these are really looking at two-year trends. So total giving from 2017 through 19 is up 4.1%, but that's a two-year average. So really, if you're looking at it on an annual basis, it's about 2%. Within that, giving by individuals is up about 2%, giving by grant-making foundations 7%, bequest 9%, corporation is 9%. But one of the things you'll notice as you're going through there is some of the red numbers. You look at 2018 numbers for individuals, and you'll see that giving actually decreased. Likewise for corporations. So if you think back to 2018, the first about 3/4 of 2018 were pretty good as far as the economy goes. And then if you recall, in the last couple of months of 18, the stock market really tanked. There was concerns about recession and federal policy, and as a result, the stock market really took a beating in November and especially in December. And we'll see a little bit later why that is important. But you can see overall that the giving is a little bit up when looking at it from a 2-year basis. A couple things to keep in mind, though, is these are straight numbers and are not based on inflation. Once you get into inflation adjustments, you'll see that giving over the period actually is flat. So even though over the past several years, as I'm sure everyone that works within the nonprofit world knows, is that need has continued to grow year over year. And frankly, from the donor side, the donations are barely keeping up with inflation. So it's creating some challenges for many exempt organizations. And the bottom note there is if you look at the past 4 decades, annual giving is about 2.8% increase year over year before inflation. So right now, looking at this, we're basically, keeping pace with inflation, but not really doing any better. Quick look at where money goes. Out of that $450 billion, about 29% of it goes to religious organizations, 14% to education, primarily higher education, 12% human services, and so on down the list. A couple of observations on where the money's going. The trend for donation to religious organizations has seen a slight decline over the past number of years, as it seems like fewer people are making donations to religious organizations. The one part that I'm a little puzzled with, I couldn't find an answer, was that grant-making foundations. One of the things that we have seen in recent years, and if you've heard me present in the last couple of years, I've spoken on this in the past, is a big increase in individual donation to donor-advised funds. That's becoming kind of the giving vehicle of choice. What I'm not clear on is if this grant-making foundation line includes money individuals are donating to donor-advised funds, and then if on the prior screen the money coming out of foundations is in effect being double counted. International affairs has also seen a little bit of a decrease over the last several years. Arts, culture, and humanities, about 5%. This is one sector that took a tremendous beating back in 2008 during the Great Recession. It took that sector almost a decade to recover. And again, we'll kind of touch on that in a moment. So looking a little bit forward, we were on pace at the beginning of the year, then the pandemic hit. And I found this wonderful infographic from the Fundraising Effectiveness Project that I think does a great job of capsulizing some of the issues. So we saw beginning of 2020 about a 6% decrease in the first quarter of giving, and Pat mentioned that earlier in her presentation. That was really spread across a decrease in January and February, and then really the bottom fell out in March as everybody's attention became suddenly focused on COVID-19 and the pandemic. You saw a decrease in the number of donors, saw a decrease in the amount of donations, and you saw a decrease in the retention rate, which is a metric by which you look at donors in the past, are they donating to your organization again, and that's decreasing. Out of all of that doom and gloom, the one little nugget of positive that I was able to find was that the small donor, defined as 250 or less, seems to be a little bit re-engaged. That is somewhat typical when you have a natural disaster. There's a lot of statistical information that shows that right after the wildfires or hurricane, donations from the small donors spikes up for a short period of time. So one of the takeaways is to make sure if you're going to reach out to that sector, do it now, while it's fresh. Those donors don't tend to donate well after the fact. Something else new added to the dialogue is indirect giving. Not sure if this is going to become a new metric, but what this is talking about is paying your barber for a haircut that you never got because of social distancing. Ordering out more, really boosting up the tips on the Uber drivers and the delivery services delivering that takeout dollars to you. Changing donor priorities. I think we're going to see a change towards health and social justice causes, and I think arts and culture are going to get beat up again. Like I mentioned already, at the recession, we saw a big decrease, and it took a while. Also, volunteerism. Obviously, if you are ordered to stay at home, you can't really volunteer, but people are starting to be ready to get back out. I've mentioned the economy a couple of times, and why is that important? Statistically, about 30% of all giving happens in the month of December. Drilling deeper into it, about a third of that 30% happens between, December 28th and New Year's Day. So as we saw in 2018, where December was a pretty brutal month in the stock market, it had a direct impact on giving for the year. So, there's a lot going on right now. The economy or stock market continues to be very, very strong, although I haven't looked at it today. But unemployment remains high. There's a lot of question marks going on, so it's hard to predict what December is going to look like. And then also taking a look at our pledge fulfillment starting to lag a little bit. With the organization that I'm on the board of, we've seen a little bit of this, but I'm concerned that it could kind of pick up as we get further in. Some things to do right now, and I think Pat mentioned this at the outset, is update your messaging to donors in your consumer base. Tell them what you're doing. Tell them how the pandemic has impacted what you're doing. I know in the case of the board that I'm on, the stay-at-home order was pretty devastating because a lot of our function is providing services for folks that come to our site. So if people can't travel, that has a pretty dramatic impact on your earned revenue or your program service revenue. So message your donors. Like I said, tell them how you're doing. Ask for help if you need it, and kind of explain how you are handling the change in mission and the change in the way that you can carry out your mission. Figure out virtual fundraising. Like I said, I'm on the board. We had our annual fundraiser at the end of May. For our organization, it's a big deal. As far as looking at the fiscal part of it, I was very pleasantly surprised at how not only our development team and people involved with our benefit were able to pivot on very short notice, but I was more surprised by our donor base, that even though we weren't able to have the big party that we always have, they still came out virtually and they still contributed. And at the end of the day, it was a very successful appeal. So again, if you haven't figured out virtual fundraising, people are willing to help out. You just have to ask. I mentioned this earlier, making an appeal targeting your small donor base, your $250 and less donors, making sure you're still engaging them while the crisis is fresh in mind. Again, reaching out to them by email or other way. Being prepared to re-engage your volunteer base. I know right now a lot of organizations are just focused day to day. How am I going to get through this week, or how am I going to make the next payroll? But be prepared. The volunteers have been anxiously waiting at home. A lot of them are not yet ready to get out, but some of them are. To the extent that they're ready to be engaged, make sure you've got a plan that makes sense to get them back into the mainstream. Update your budget. Use pencil. We just went through the budgeting, or we're in the process of going through the budgeting process on the board that I serve on, and I noticed the last go around draft budget was version 5. I don't know that we've ever gone past 3 before. But be prepared, as we've seen this past year. You're going to be asked to pivot on very short notice. If infection rates go back up, we could go to a more stringent stay-at-home order. Tony and Jim mentioned the possibility of another round of PPP funding. If you were to get another bucket of money for PPP, how could you use it? Plan ahead, rather than, I think with this last go around, a lot of folks were given money on very short notice, given very ambiguous rules on how to spend it, and probably didn't use that money in the most effective way for their organization. So kind of have in the back of your mind, how did we spend the money the first go around? And if we get a similar amount, what makes sense to spend it on this next time around? The next point, I think, is fairly obvious, and you're probably doing it, but if you aren't already monitoring cash flow, start. Things change quickly. It's never easy to go to your staff and say, we're going to have to reduce your hours, but a more difficult conversation is, I'm sorry, we can't make payroll. Your last day is Friday. So make sure you're monitoring cash flows, doing projections, and trying to figure out, okay, if we need to start tapering, what folks can we start reducing hour first, so that we're not having a dramatic impact and possibly having to shut the doors totally. If you haven't done so already, engage your finance committee. They may have some great ideas. Again, getting some new perspective. As an executive director, you're probably very focused on the day-to-day operations. Looking at your bank account balance slowly dwindling away. Reach out to the finance committee, and they may have some great options or ideas on how to stretch a little bit further. Also is a great time to engage your nominating and governance committee. People are in the mood to help. Start planting those seeds. When's the next time you have board nominations? Start reaching out and developing those relationships so that you have the next round of board members engaged with the organization. So just some things to think about doing for right now. Just a couple of things I wanted to touch on again. Some of these have been mentioned already, but I'll bring them up again. The first was a huge victory for the exempt organization sector, was the retroactive repeal of the parking tax. The last couple of years, we've gone on at length about this particular compliance burden, and fortunately, it has been repealed. IRS is still working through the backlog of the refund claims. I know I recently got a letter from IRS on a refund claim we filed at the beginning of March that it's finally been worked. So literally for several months during the shutdown, IRS wasn't touching any paper forms, and those refund claims would be in there. PPP loans, as Jim and Tony mentioned, it's ongoing. Kind of consider financial reporting of timing of the forgiveness. Whether it'll end up in your 2020 financials, or if it'll get pushed over to 2021. Again, the board I'm on has a fiscal year that just ended. So that fiscal year is going to look horrible because we have this big deficit. We have the PPP money that we received that on a cash flow basis, we were pretty much break even-ish, but from a financial standpoint, it's going to look pretty bad because the loan's going to be on the books as a loan and not as revenue. Deferral of the depositing of employer portion of FICA tax was mentioned already. Tony, I think, mentioned the deferral of withholding of the employees portion of the FICA tax. Not many employers have really embraced this, since there's a large amount of uncertainty relating to that part of the tax. And then new this year, $300 above the line charitable deduction for 2020 for those individuals that don't itemize. So this may be another opportunity to engage those small givers. Last couple of things, individual required minimum distribution was waived for 2020. That means individuals 70 and a half or 72 don't have to take money out of their IRAs, but they can still take distributions out of their IRAs and make direct contributions to charity. So even though the RMD was waived, it may still make sense to make those qualified charitable distributions out of the IRA dollars to bypass taxation on those distributions. And then the last thing I'll mention just very briefly, we talked about this in prior years, but the unrelated business income siloing rules, some proposed regs were recently issued that are very taxpayer friendly. So it helps make it a little bit less burdensome, but it still does require some planning. With that, I am out of time for my part. Like I said, I will be happy to address any questions. You can send me an email. There's my contact information, so feel free to shoot me an email. And thank you for your attention, and enjoy the rest of the presentations.